Good afternoon, everyone, and welcome to the Q2 2025 edition of the Blackfinch Aim in Focus webinar. We're pleased you can join us today. For those of you who are new, my name is Josh. I'm the product specialist for our listed investment solutions here at Blackfinch, and I'm joined by the wider AIM team here today, which is Lawrence Campion, investment manager at Blackfinch AIM, as well as Chris Swanepoel, head of AIM Investments. So just before we begin, it's important to note that the content of this webinar is intended for the professional advisory community, and so the details covered today are not intended to be taken as financial advice itself. Or when we mention single stocks, this isn't to be seen as recommendations, as these are examples of companies in the context of a well-diversified portfolio. But as always, if you'd like to submit a question prior to the webinar for us to discuss, please use the contact information contained in the sign-up page or simply email eventswebinars@blackfinch.com. We do have a Q&A inbox. Please do also use that. If we can't get to it, we'll ensure to reach back out afterward as well. So before we begin, it's important. Now, I'm sure that you can agree this is certainly a well-timed webinar in light of the increased volatility across global markets, including AIM. And this was largely since President Donald Trump started to introduce the idea of financial tariffs back in March. And more specifically, for the UK economy and AIM, there's still some uncertainty remaining over government policy in the UK, and that's led by Rachel Reeves. But before we dig through the thickets of the UK, to give it a quick overview of the agenda. First, I just wanted to tackle one of the main talking points in everyone's lips at the moment, and that's financial tariffs and the uncertainty that's crept into markets in recent weeks. Second, we'll look at how that's impacted the UK economy and more specifically the current state of play. And we'll also discuss any other factors currently influencing sentiment. And then I'll pass the baton over to Lawrence, who's going to explore how some of our investee companies have been navigating the current economic climate. And finally, on to Chris with some final comments on our portfolios and to discuss the value in AIM. Now, I thought what we do is we try and chart what's gotten into markets recently and what's just made them so jittery. And I think this tells the story perfectly. Now, this shows Trump's economic policy in action via tariffs. Essentially, what Trump appears to be doing is he's reordering world trade and economic policy and security policy. But what we've been able to do is use our Bloomberg terminals to source the raw data on an index that actually quantifies this trade uncertainty at the moment. So this just takes the frequency of articles in global newspapers that discuss policy-related economic uncertainty when it comes to trade, and it takes a simple long-term average of them. And this has a typical scale of 100. And as we can see, we are pretty much off the scale right now. I've had to amend the y-axis to frame this right. So that original base of 100 isn't in fact on show. But if we just look leftward on the chart, we can see that the biggest increase was Trump's last term. Now, this only goes up to the end of March. We don't have that Liberation Day impact and uncertainty through here right now, but we can kind of begin to frame why markets have capitulated across the board. So whether you're smaller in scale and listed on the AIM market, or even some of the larger names that are listed on the FTSE 100 or the S&P 500 in the US. And just to try and put this into some context of how much of an anticipated event this was, if you try and view this mathematically, this was seen as what's called a 9 sigma event, meaning the probabilities of anticipating this scale and impact was so small and negligible that people were naming it a unicorn event. So this talks to these swings in pricing we're seeing at the moment. And it just becomes so difficult for companies to justify CapEx without this clarity. And then the likes of your sell side analysts struggle to make accurate models. And this is the result of what we're seeing in markets at the moment. But how has this impacted the UK and the AIM market, and what's the outlook? Well, if you have been checking markets recently over recent days, you can see there's been a good string of trading after the impacts of Liberation Day hit markets. And it comes from a handful of factors, really. Before I introduce the chart on the screen, the first factor is, in fact, the extent to which Trump's tariffs may impact the UK. As we all know, the extent of the announced tariffs were higher than markets anticipated, and then this caused the global sell-off and a sharp move to risk-off sentiment, with AIM getting caught up in this noise. However, after the dust has settled, we can see that the UK's economic position, it's allowed us to receive the lowest level of impact from tariffs. And actually, in fact, we've been seeing a lot of commentary that the UK is at the front of the queue for a trade deal on the US. So should we see these headlines play through, it's likely a lot of this poor sentiment in pricing could be lifted. We could see some kind of relief rally. But on the economic front, UK markets have been buoyed by a strengthening pound against the dollar from this tariff noise, which is a good positive to combat that stubborn inflation prints that we've been seeing and hopefully get us closer towards that 2% Bank of England target. And we did see this a couple of days ago with UK CPI softening, and that was more than forecasted to 2.6%. So that's further good news. But we also had some strong GDP results, and this is what the chart is showing here. So I've cited the ONS's latest monthly GDP figures, and the data just blew estimates out of the water, with all sectors showing positive growth and the headline figure coming in at 0.5%, while within the services component, the services sector, consumer-facing services picked up by a really healthy 0.7%. And investors have enjoyed that good news, and that talks to recent trading. But for the meantime, the economic outlook, including the trajectory of GDP in this chart, will remain uncertain until we have clarity on the impact of tariffs and if a trade deal can be made. This is also going to feed into the autumn budget later this year and can influence the relative level of spending or borrowing required to combat the potential change in costs. So for the moment, we're waiting to see what shakes from the tree. But until then, I think it's worth us touching on some of the trading of our AIM companies, as we've certainly had some good news stories from here. So Lawrence, I'll introduce you here. Good afternoon, and I'll hand over to you.
Thanks, Josh. And good afternoon, everyone. So today I'll be covering 3 investee companies that have all reported on trading recently. So as displayed in the charts, each company experienced a declining share price at the start of April, along with the markets, as the evolving tariff situation unfolded. However, this reversed on announcement of their respective results. So starting with Anpario on the left, Anpario is a manufacturer of high-performance natural feed additive technologies for animal health. So the company has an established global sales and distribution network in over 70 countries, which helps diversify their revenue. So the company announced final results in the end of to the end of March, which showed record sales and continued gross margin progress. So Anpario carried out a key acquisition in the year of Biovet, a US-based producer of animal health and nutrition products, principally for the US dairy market. So Biovet has production facilities in Wisconsin, with potential for future expansion, which gives Anpario a platform for continued growth in the US, but also a potential mitigation of rising tariffs. So Anpario noted the US tariff impact on profitability is not material and could bring opportunities, with, for example, some European distributors facing potentially higher tariffs. So we also note Anpario has vast experience in effectively dealing with tariffs across its many markets. Moving on to the middle, there is Volex. Volex is an integrated manufacturing specialist, and they manufacture and supply critical power and data transmission products, again globally. And think of the likes of data cables, EV chargers, to global brands such as Tesla. And Volex actually updated the market shortly after quarter end. So they actually said financial year 2025 revenue and profits are to be ahead of expectations, and strong demand was seen across multiple areas of the business, including electric vehicles, consumer electricals, and complex industrial technology. So Volex has a global footprint with operations in low-cost countries such as Turkey, Indonesia, India, and Mexico, among many others. So this diversity should enable the company to adapt to changing client needs. Volex is also, in many cases, either the sole provider or one of a limited number of providers that can service complex client requirements. And this helps them embed into the client supply chains. So while the tariff impact is uncertain, we believe Volex is well placed to adapt and continue its growth story. We also note shortly after the trading update, multiple insiders purchased the stock. Now, finally, we move on to Ramsdens, which is a UK-based diversified financial services provider with over 150 retail stores. So Ramsdens released a trading update for the half year ended March 31st, and they announced trading for the 2025 financial year is expected to be ahead of expectations. So the rise in gold price has continued to benefit the precious metals segment, with profits up 50% year on year. But other segments as well were performing well. So, for example, the jewellery segment performed ahead of expectations, pawnbroking was in line with expectations, and foreign currency exchange was level with the prior year, but noting this year has a later Easter, which impacted. So we view the share price reaction of Ramsdens as recognition of these strong results, but also likely related to Ramsdens not having any exposure to US tariffs. So I will now hand over to Chris to cover the value on offer in AIM and also the outlook.
Thank you, Lawrence and Josh, and I welcome you all to our quarterly AIM update. As we reflect on the insights shared by Josh and Lawrence, I'm reminded of Rudyard Kipling's timeless words, "If you can keep your head when all around you are losing theirs." That sentiment perfectly captures our approach to navigating the current environment. Despite the challenges we face today, I remain confident that we are well positioned for a reversal of fortune in our portfolios. Now, more than ever, it's essential that we stay calm, focused, and not allow short-term noise to dictate long-term strategy. As I often say, we cannot shut the stable door after the horse has bolted. Yes, we are operating in a period of heightened uncertainty, but it is not unprecedented and certainly not insurmountable. Trade continues, life continues, and crucially, the innovative, agile companies we invest in are adapting. Some are even capitalizing on the changing landscape, as Lawrence has pointed out, with the opportunities emerging from recent tariff-related challenges. Opportunities do exist, and in some cases, they are accelerating. One of our recent investments exemplifies this. MHA Baker Tilly, a well-established UK-based accounting firm with a market cap nearing £300 million, has successfully listed on AIM. Their decision to join AIM rather than the main market underscores their ambition for growth and acquisition. AIM remains an ideal platform for companies with scale-up aspirations, and we believe this is just the beginning of a broader resurgence. Furthermore, the momentum we're seeing in private equity through takeovers like those attempted with Niox and Advanced Medical Solution also point to a growing need for viable exit routes. Public markets, particularly AIM, are increasingly likely to serve this need, reinforcing our conviction in its long-term value as the go-to marketplace for ambitious, high-growth businesses. In summary, yes, we are navigating volatility and disruption, but we are not reacting emotionally. We are positioning ourselves strategically. We believe the market will turn, and when it does, our portfolios are primed to benefit, not only from recovery, but from the opportunities these turbulent markets present. With that, I pass you back to Josh for concluding comments.
Thank you both. Some great insights there. Now, that's everything for the April 2025 AIM in Focus webinar. So thank you, Chris and Lawrence, for joining us today, and for everyone else for tuning in. I hope you've all got some nuggets to take away to your client meetings once you come back from the holiday periods this weekend. As always, should you have any questions off the back of today's content, please do feel free to contact your dedicated business development manager, and we'll ensure to get back to you. But the next webinar will be held on the third Thursday of every new quarter, meaning the next will be Thursday, the 17th of July at the same time of 1 p.m. And we look forward to seeing you there. So enjoy the Easter holidays and bye for now. Thank you.